Well, if you love real estate, you might be curious about what to expect in 2023. It would be an understatement to say that the real estate market has seen a great deal of turbulence and uncertainty over the past few years. Therefore, it's understandable that investors and other parties are wishing for a return to some much needed serenity and normality. So today, we'll look at some of the most important considerations you need to keep in mind before investing in real estate in 2023. The sharp increase in real estate prices since the COVID-19 outbreak is the trend that has severely upset the housing market. The average home value in the U.S. increased by more than 41% between March 2020 and October 2022. Since 1991, the annual growth in the price of residential real estate has averaged 4.4%. Unsurprisingly, this has impacted homebuyers' desires by making existing affordability concerns even more of a problem. In addition, it has given investors access to off-market properties which sell for less and a variety of financing methods, which have opened up new prospects for them. The future value of real estate is therefore the key worry for investors. While different experts foresee differing real estate trends in this regard, there's a strong consensus that the unsustainable appreciation is ended. The majority of stakeholders expect prices to rise by 1 to 2% or no more than 3% in the upcoming year, which will lessen some of the strain brought on by rapidly rising real estate prices. Some experts even forecast 0% growth or a decrease in American property values. Widespread relocation to suburban areas and small towns was one tendency that occurred directly as a result of the pandemic. The relatively slowed spread of the coronavirus and the more affordable home prices and rental rates drove many people towards secondary and tertiary markets and away from large metro cities. The increased rate of remote jobs also influenced this geographic change. However, it's anticipated that in 2023, this real estate tendency would significantly reverse. In many of the markets that grew during the pandemic, we may already see changes. The most notable cool-downs in these markets are being reported by Redfin. In the upcoming months, it is anticipated that this trend will persist. Major cities are anticipated to reclaim the majority of their lost positions. Due to the fact that many returning employees won't be able to afford to buy a property there, investors will have opportunities to invest in rental properties in major cities. In markets with high price to rent ratios, the demand for rentals will be especially strong. Rising mortgage rates have been one factor that has been present in the 2022 real estate market. The interest rate on mortgage loans began to rise this year after falling to historically low levels last year. The interest rate on 30-year fixed-rate mortgages is currently at its highest level since April 2002, 6.92%, and is approaching the 6% threshold. This is putting further strain on a variety of parties, particularly first-time homebuyers who are already having a difficult time with the soaring cost of housing. Investors encountered lower demand while benefiting from alternative financing sources, since many of them were forced out of the market. What can we expect in terms of mortgage rates in 2023? Fannie Mae anticipated that the average 30-year fixed-rate mortgage rate would be 4.5% in the coming year in August. However, this was before the rate's sudden rise. Since then and back when it is still hovering around the 5.5% range. It is realistic to anticipate that interest rates will continue to be much higher under the current situation, at least until the first quarter of 2023. Due to this real estate trend, borrowers who can acquire credit outside of the conventional mortgage market will be in an advantage in 2023. Although at a slower rate than property prices, rental rates have climbed across the country in recent years. In comparison to the same period in 2021, rental rates have increased by 6.8% since the beginning of the year. Despite the fact that rent growth is slowing down, most experts predict that it will still increase next year and even hit new historical heights. The primary factor driving this real estate trend is the fact that it still forced many people to choose to rent over home ownership due to the property prices that are still expensive. We may significantly anticipate that as employees return to large metropolises and are faced with the exorbitant expenses of living in home ownership, rental rates will rise the fastest in these areas. For the most part, this is good news for property investors. As long as they can find inexpensive financing solutions, increased rental demand and high rental prices are the ideal formula for maximizing return. In 2023 and after, interest in fractional property ownership will also increase. With real estate investments starting at just $100, platforms like Lofty AI, Honeybricks, Acru, and Quantum RE provide first-time small investors with unparalleled access to the market. Tokenization, which combines the relatively new idea of Bitcoin with the conventional real estate investing approach, facilitates and accelerates this real estate movement. In order to gain from owning investment properties in 2023, many people will turn to alternative tactics like fractional investing, while home prices and mortgage rates stay high. Although we are still a long way from experiencing low property values and reasonable mortgage rates, it is anticipated that real estate investors will have many lucrative chances in 2023. With this, we wind up today's video. Let us know what you think about them in the comments section below. If you find the video helpful, press the like button and do subscribe to our channel to watch more interesting videos like this in the future. Goodbye.